Hello, it's Bruce at pensionsolutionscanada.com and GM CAMI Ingersoll. Many folks leaving there right now. So we've talked about copycat and commuted value. Just a note on copycat, I just spoke to a fellow who left his pension at CAMI, said he couldn't find a copycat quote. We have done many copycats out of CAMI. We get very good rates from the insurance companies. So include us in your, if you're working with an advisor, you want a second opinion, come on over. Let's have a look. Anyway, today, commuted value, would that work for you? Commuted value has two key challenges. The first challenge, of course, is obvious. Part of the commuted value money is taxable income. So generally speaking, about 2/3 of your money will be tax sheltered into a lira, no tax event on transfer, just goes right over. Let's say you have 500,000, 350 more or less would go to a lira. That's that's tax efficient. There's no tax on that. What about the other 150, Bruce? Well, the other 150, the best place for it is your own personal RSP, if you have room. Secondly, would be your spouse's RRSP. A little more tricky because you have to take the cash, pay the tax, put it into your spouse's or partner's RSP, and then your spouse or partner gets that tax money back. Put it into TFSA, sure, future growth is not taxable, but there's no tax benefit on it coming out. Anyway, talk to us, give me a call. So that's the first challenge, and that's all because of the maximum transfer value, which is old legislation, MTV, maximum transfer value. The second challenge is taking commuted value. In order to make it work, you have to participate in the stock market. You have to have equity or stocks in your portfolio. You cannot take it, jump into a GIC, and expect to do well. GICs are just not paying enough. You need 4 or 5%. Our portfolios are doing 6 to 8%, depending on the asset mix, depending on the mix, depending on which one. So talk to us about that. Anyway, those are the two key challenges. The maximum transfer value, which means you're going to tax hit, and secondly, you need a portfolio like ours that will give you good rate of return. So why would you do, back to that, why would you do this? One reason is I have a client who has kids, and as you know, a pension, when you die, or what we call second death, you and your partner or your spouse die, or if you're single, you die. That's the end of the story. No more money. Boo-hoo. However, commuted value, you control how much you withdraw, how much you leave behind. It is taxable when it's left behind, except it's left for a spouse. So that's the best case scenario. You die, the spouse takes over, no tax on transfer, spousal rollover. So you control it. Also, because you're in a portfolio, an investment portfolio, if we can leave it there and it grows, then you could have a much better income in retirement. What about government pensions? Well, then we're talking about the tax efficiency of different income streams. So you have a pension, you have 2 government pensions, maybe you're working. You have some cash from your commuted value. So we want to put all of those streams in to you in your pocket in a tax efficient manner. My favorite really are people who go back to work. And I know you've worked 30 plus years at the factory. Get a part-time job that you like. Hey, I've got a guy who drives forklift when he wants at a lumber yard. And then want to go on a holiday. Hey, boss, I won't be in this month. You control it. So you go a job that you like. That helps to cash flow the family. Anything else here, Bruce? Bad health. Every month, there's a notice comes out from the union saying brother so-and-so, sister so-and-so died. If you're not in good health, don't take the pension. Don't take the copycat. Take the commuted value, even if you're single, because at least you leave something behind. Okay, that's it. Thank you. Thanks for watching. Give us a call. Jump online, pensionsolutionscanada.com. Book a 15-minute free Zoom call with me. If you have my phone number, just go ahead. Give us a call. If we don't hear from you, happy retirement.